Okay, what's up, traders? So today we have a very exciting video for you. Okay, we actually hesitated to talk about this pattern. Okay, but we felt that we'll just share it with you. Okay, so this pattern that we observe in this market is called the Forex institutional pattern. Basically, it's about how the institutional players, or rather the big boys, they use this pattern repeatedly to make money off retail traders like us. Okay, so if you understand the Forex institutional uh, pattern, or rather how they actually operate, how they have their edge in the market against you, then you will be able to align yourself with them, right, and not be caught on the wrong side of the market. Okay, so of course we explain what this pattern is about. So in today's lesson, we'll talk about what the Forex institutional pattern is. Okay, of course, then we'll go on to identify it on charts, because we'll just tell you what it is. It doesn't really mean much if we don't show you how to identify it. Okay, we'll also show you how off movement in Forex can be understood through this pattern. Okay, and this pattern is made out of three components, which we'll cover later. And lastly, we also talk about the practical aspect of it, which is how do you use this pattern to create a trading plan that makes money, okay? How do you use this trading pattern or Forex institutional pattern to identify the direction that the big boys are actually taking, and how do you trade alongside them? Okay, so let's get into it. So before we get into it, I want to talk about why this pattern is so important. Okay, early on we say that this pattern helps you align on the right side of the market. Okay, but this pattern is also very important because it's always happening 100% of the time. Okay, that means that whether you know it or not, it's always happening. So this is something that you definitely want to take note. Okay, and if it's happening 100% of the time, then it's definitely observable across all time frames. Okay, so this pattern is relevant regardless of whether you are trading the M15, you are a day trader, you are a scalper, you are a swing trader. It is observable across all time frames. Okay, so your trading decisions is actually being influenced by this um, pattern, okay, whether you know it or not. And hopefully today with this video, it will change the way you see the market. Okay, that's our goal of creating this video. Okay, and also to give you a exact trading plan that never changes. Okay, because this is how the big boys work. Okay, you must understand that the big boys they are doing this professionally. They are in this business. It doesn't make sense for them to be changing their trading strategy every single day. Okay, so that's what retail traders do, right? They jump from signal provider to signal provider. They change from strategy to strategy, right? When something goes through a drawdown, they change their strategy. But the institutional traders, they're sticking to the same proven so-called business model or trading strategy every single day. Okay, and that's what we're going to cover with you. Okay, so now you might ask, what is the Forex institutional pattern? Okay, so the Forex institutional pattern is made of three phrases. Okay, sorry, three phases, not phrases. Yeah. Okay, anyway, it's made of contraction, expansion, and trend. Okay, not to worry, I'll go into greater details for each of these phases. Okay, but just know for now that there are three phases. Okay, be it contraction, expansion, and trend. Okay, in our case, especially if you're a new trader, we want you to focus on the trend. Okay, trend is where you're going to make the most of the money. Okay, contraction is going to be the phase where you get very frustrated because price is going nowhere, as you can see over here. Okay, price is going nowhere. Okay, and expansion is going to, if you got the wrong direction, for example, this expansion, you sell, you're only going to have temporary profits, and if you don't exit fast enough, right, you're going to lose money. Okay, so it's very important to if you're new, focus on the trend, and we'll show you exactly how you can just trade the trend, because it's the easiest and also the most profitable. Okay, but before we move on, okay, I just want to touch on this like some background about this pattern. Okay, so when you look at technical analysis, you must understand that behind every trade placed in the market, okay, you have a trader who believes they're going to win. Okay, you just think about yourself. You're not going to open a trade if you think you're going to be wrong, right? No one wants to lose money. Okay, that's a very that's 100% for sure. No one wants to lose money. The only reason someone buys something is because they believe that they're going to be right. Okay, therefore this means that the markets, okay, be it forex market, be it the stock market, they're all belief driven. Okay, it reflects the beliefs of the traders or collective belief. Okay, so the current and future price is only a result of the beliefs that support it. Okay, so in this case, you must understand that we are trying to analyze, when we look at the chart, right, we're trying to analyze the beliefs behind the traders. Okay, we're not trying to analyze price. Price is just kind of like a reflection of the belief of the market. Okay, and this forex institutional pattern that we're talking about is actually looking at trying to look at the beliefs of the big boys. What do the big boys believe? Do they believe that price is going to go up, or do they believe that it's going to go down? Okay, because if you've been trading for some time, you know that it's better, right, to follow the big boys because that's where you make most of the money. Okay. Okay, now let's get into the first phase, which is the contraction. Okay, so normally in this phase, what you see is actually caused by low institutional volume. That means that the institutions are not very interested in in taking a position. Okay, this kind of scenario happens like during ECB, Euro Central Bank conferences, Bank of Japan conferences. Basically the market is not moving much because the market is not sure yet. So what a lot of retail traders try to do is they try to buy, they try to sell, and the truth is whether you buy or sell, your profits are it's just very minimal. Okay, even if you buy the low end of the range and sell the top, your profit is very minimal. You don't really see explosive growth in your trading account. Okay, so basically in this phase, price is trapped and range is narrow. Okay, you'll see a lot of this kind of like doji candles. Okay, if you do not know what a doji candle is, get our book. We'll put it in the download link in the description below. Our free book, we talk about what the different type of candlestick patterns, so that will definitely help you. Okay, so basically back to this is that price is trapped and range is very narrow. Okay, so after contraction, right, means that there's no volume. Next comes the expansion phase. Okay, this happens when there's increasing institutional volume. That means that the institutions are taking activities. They're taking positions. Okay, so the mistake a lot of people take is that they trade the breakout. I mean, okay, it's fine to trade the breakout. There's nothing wrong with trading the breakout, but you have to be smart about it. Okay, so the range starts opening up. You can see that the candle body is you look at this candle body, is a big candle body now. Okay, you don't really see this kind of doji candles. Okay, and it starts taking out the highs and lows. So this low was taken out, this low was taken out. Okay, so in this space, a lot of retail traders, what they do is they follow the trend. They say, oh, market has just broken out of consolidation, in which they're kind of right. Okay, except that they don't realize that they're in the expansion phase. Okay, and what smart money is doing is they're actually accumulating positions at discounted price. Okay, as price goes down, correct, they are buying the position. Okay, they are entering the market from retail traders, because for them to accumulate their position, someone must sell them must give them the liquidity, and because they are big boys, right, and they want to accumulate big position, they cannot do it upwards, meaning they cannot beat the prices on themselves. Okay, what they do instead is they buy down instead. Okay, so they just buy when price drops, accumulating on the way down. Okay, so what happens after they accumulate? So basically there's a change of hands. Basically the retail traders are selling to the institutional traders who wants to bring prices up. Okay, so what happens next is trend phase. Okay, institutional traders start taking profit as a price goes up to them. Okay, so what happens is that the traders, retail traders like you and I, who see this as a valid breakout and start shorting, you actually see temporary profits. Okay, and in fact, if you don't even take your profit in time, you'll probably be stopped out if you put your stop loss above this swing high. Okay, so this is the phase that you want to be trading. Okay, in this example, it's not the perfect example because of this kind of counter trend. Okay, but you get the idea. Okay, the idea is always institutional traders are always accumulating their positions on on the way down. Okay, accumulate on the way down, and then once retail traders are out, institutional traders they profit off, and they repeat this phase over and over and over again. Okay, you just take a look at any charts. Okay, after this, pause this video, or maybe even pause this video right now. Okay, look at the chart. Can be N15, can be H4, can be H1, doesn't matter. Okay, look at the chart, and I think you will see that this pattern always happen. Okay, and this trend phase is a phase that you want to be profiting off. Okay, so now I can hear most of you asking, okay, this theory is fancy, it's interesting, I agree with you, blah blah blah, but show me the money, right? Ultimately, you want to know the strategy. How do you make money off this, right? It's useless to know that, oh, this happens if you don't know how to make money off it. So um, right now we're going to teach you how you can actually use this pattern. Okay, because this video is meant to give you kind of a trading strategy that you can test. Okay, just a disclaimer first, if you're going to use this strategy, try on a demo account first, because you're still new, and identifying the 3 phases takes time, takes a lot of experience. So I definitely use caution. Okay, always be prudent. Okay, anyway, let's get to it. So how do we use this pattern to profit? Okay, not to worry, we'll go through each of these step by step. But for now, let me just give you an overview of how do you use this pattern to profit. Okay, so step number 1, you identify the contraction phase. Okay, earlier on we say that the contraction phase is where the candles are narrow, prices is narrow, it's going nowhere. Okay, it typically happens during like when there's an ECB press conference, there's a BOJ press conference, of there's FOMC. Okay, not always, but generally. Okay, the step 2 would be to draw middle line to determine average price. Okay, before you get confused with this, don't worry, we'll cover this, we'll make it crystal clear for you. Okay, step number 3 will be wait for the expansion phase. Okay, because after the expansion phase comes the trend phase, and remember that we want to be trading the trend phase. Okay, so that's how we do it. Okay, and step number 4 will be we look for entries once price causes a fake break of the average price. Okay, so let's just go through each of these step by step. Okay, so we'll use back the same same charts as just now. Okay, so number 1, identify contraction phase. So earlier we talked on that this is contracting. Okay, won't talk too much about this because we explained this just now. Okay, so after the contraction phase comes the you draw the middle line. Okay, so if you want to be really particular about your line, then you can just measure the entire range, really draw it properly. Okay, this because we drew this off PowerPoint, but if you are drawing on your charts, you can draw it properly. Okay, or maybe, yep, you can just draw it properly. Okay, I think you can figure out how to draw the center line. It's quite simple. Okay, you can use your MetaTrader, you can use your trading view. Okay, I don't think we should go into this. I don't want to make this video too long. Okay, so you draw the middle line here. So we learned earlier on that after the contraction phase comes expansion phase. So we see the expansion phase over here. Okay, and we also say that smart money is accumulating on the way down. Okay, so we wait for the expansion phase. So this expansion phase happens, right? Okay, so the next step would be, or rather the last step would be look for entries once price cause a fake break of the average price. So in this case, you can see that, this is the average price. Okay, we kind of estimated it. Okay, you can see that this candle over here breaks above, then after it breaks below. Then looks what happened after it breaks below. It kind of retest here, test, and then it starts plunging down. So this is how you use this pattern to profit. Okay, this is of course one of the many ways you can use this pattern to profit. The other way is, you can obviously try to pick this bottom here, which we will not cover in this video. But the most straightforward way that you can use this pattern would be what we just shared. Okay, this is a trend. Okay, ideally, if you can capture this trend, will be good. But because this is a beginner video and we want to provide a way that is simple, right, straightforward. You can just use this first, okay? When you get proficient at this and then you want to learn how to pick this bottom, okay? Then that one we'll teach you again, maybe in the next video, okay? So hopefully that all these are clear. Okay, so let me just end off by sharing a recap of what you actually learned. So earlier we talked about what the Forex institutional pattern is, right? We talked about how the Forex institution big players, rather institutional players, use this pattern as their business model. Okay, basically it consists of three phases. It consists of contraction, expansion, and trend. Okay, and we also talk about how trend is the phase that you want to be buying. Okay, that you want to be trading. Okay, because that is where you make the most money. Okay, because you are on the same pitch as the big boys. Okay, now we'll talk also about how to identify it on any charts, right? Contraction is the bodies of the candle are very narrow. Expansion is like a breakout, and the trend is kind of like the reversal of the breakout. Okay, we also talk about how all movement in Forex can be understood through this pattern. Okay, we actually ask you to take a look at some charts, look at the charts and find out look at this pattern yourself and you'll find it in every single time frame. And lastly, we end off with how do you use this pattern through our 4-step. Okay, if you need, scroll back to the video, watch the 4 steps again, and yeah, just apply it. Okay, so we hope you enjoy this video. If you're new to our channel, definitely hit the subscribe button. Okay, we try to create like 2 videos every week. Okay, we try our best because we are still running our signal service, and it's very hard to manage everything, but we'll try to carry on giving you value. Okay, if you're also new to our channel, also definitely get our free book. Okay, it's like a 40-page book that is teaches you a trading system that we use also, right? It's totally free. We'll put a link below. So if you have any questions, comment down below, write into us, right? We'll be happy to address your questions, and we'll see you in the next video.